3, 2, 1, 0, and liftoff. Liftoff. Americans return to space as Discovery clears the tower.
TTMTrades, welcome back. We're going to be doing our top 3 for the week as I sit here and I get adjusted. They're going to be on ticker ARDM, ABIO, AGEN, and PLX. So let's just jump right into it, man. So ticker ARDM, let's look long term on the weekly, see what we got going on. So as you can see here on the weekly, ticker ARDM had this nice rundown or whatever due to news, catalyst, I'm not sure. But it fell right back into the support channel from the previous consolidation period prior to the run-up. So it fell right back into that same exact channel. We actually started watching this one back in early February. We want to play the run from the original support back in this area from $1.10 up to the gap fill. So we got the gap fill, which was right at $2 on the daily. Once we hit the gap fill, then again it pulled back. So one thing to pay attention to, ticker ARDM, is making higher highs and higher lows. So you have this low here with a high, and then again as it's pulling back, it's making a higher low. All right, so one thing to pay attention to watching ticker ARDM, you do have this upwards trending stock on the weekly with accumulation nonstop, and then on the weeks of selling is very low volume. So this all symbols a consolidation pattern, right? Looks much like an ascending triangle pattern. If you draw the resistance line straight across in this channel and you draw this trend line going straight upwards, then it symbols a ascending triangle for a possible breakout play here. Now one thing to pay attention to is, like I tell everybody, on a strong uptrend and or downtrend, your one standard deviation Bollinger Bands, they act as a 10-period moving average whenever a stock is trending very high or very heavily, whether down or upward. So when we put a 10-period moving average, which is this yellow line here, as you can see, anytime the stock is trending downward, that yellow line moves very parallel to the one standard deviation Bollinger Band. Same as opposite, if we're trending upwards, then that one standard deviation Bollinger Band, that 10-period moving average trends very closely to that one standard deviation Bollinger Band. So one big thing is to use the 10-period moving average is to identify the short-term change in their momentum in the stock. So if you look at this big picture, that one standard the 10-period moving average, the stock is trending above it nice and perfectly. All right, it's currently acting as support as the stock begins to trend up into its previous line of resistance. So big picture, what we want to see going into next week is we want to definitely make sure this 10-period moving average holds, which is currently sitting right at 138, and then if it doesn't hold, then you're going to pull back down here into these old lines of support back at 116, 118. So first we want to see that 138 holds. If the 138 holds, then going into next week, this week, what we want to see is a bounce off of that 138 to start creating newer highs on increased volume. Now if we just zoom into the daily to get a nice closer picture, as you can see here, that downward trend we was talking about, there's that $2 gap fill that we played, and now you get the nice pullback. Now one thing to keep in mind is the one standard deviation Bollinger Band. Anytime a stock is still in a nice steady trend and or is moving sideways, it will not, when it's in a nice slow uptrend, it will not fall below that one standard bottom deviation Bollinger Band, because if it does, then that begins to signal the beginning of a possible downtrend. So as you can see here, as you was coming down that gap down, you ran up above the middle Bollinger Band, you pulled back into that bottom one standard deviation Bollinger Band, ran up into $2, came back again, found support on that one standard deviation, ran up, and as you pull back again, final support on it. So like we said, we want that support to hold. And then going into next week, the volume has been pretty low, which are all consolidation patterns, all signs of consolidation, right? Low volume, consolidation, low volatility. there aren't any wild price swings, so a breakout is to happen here very soon, going into next week. So I would keep an eye on this one. All right, and that's ticker ARDM. Now ticker ABIO, big picture. Going out to the weekly, when we look at ticker ABIO, you had this nasty gap down here, probably on the bad ER, news, trials, whatever the case may be, right? Now ABIO is within this price range. There's been a lot of buying, and now it's trying to start an uptrend and back upwards to the upside. So as you can see here, you got that low of 45, that high of 64, that low of 48, and then you got this nice crazy spike in volume up to about 86 cents, and then a nice pullback. But now, as you can see, it's also trending above that 10-period moving average, and the 10-period moving average is beginning to curve on a weekly time frame, and you want to see this begin to start trending upwards. Now, when you use the Bollinger Bands, you use the Bollinger Bands for profit targets, price targets, right? They adjust based off the support, resistance, the past volatility of the stock, the whole nine. The bands will adjust, right, and adapt. So right now, what we're looking at is breaking over that one standard deviation Bollinger Band to get us from in between the two, to signify we are no longer in that downtrend status and we are trying to work our way back up. So right now, that one standard deviation, you got major resistance at 62. What's good to see is that the price action closed at 63 last week. All right, with the major overhead resistance right at $1.09, where the middle Bollinger Band is at, and that's on the bigger time frame. So now we come in on the daily, as you can see. There's that low, the high, the low, and then the higher high, and the price action is kind of trending above that 10-period moving average, and it's lining up with that one standard deviation of Bollinger Band on the daily to show that we may be moving in some type of uptrend here sometime soon. One thing to keep an eye on, though, is just in this peak, this area, that looks like there's a lot of indecision as far as back and forth between the bulls. So I would probably try to play my entry right at the middle Bollinger Band, right at 56 cents. You may get a pullback here soon. If not, that's all the better, excuse me. But definitely I would try to play my entry right at that 56 cents, possibly get a dip down in that area before you start that uptrend. But as you can see here, you're trending above that one standard deviation Bollinger Band and two standard deviation, with some nice volume constantly pushing this up. Yeah, and there's not much resistance on the way back up if you pay attention. So right here, as you can see, this area of support had became this area's line of resistance. You had that nice gap up to break through, and then finally you broke through right here, and now you're trending on that area of resistance. So now this has become a line of support, just as it was a line of support here. So we have to identify the channel that this price action was in from here to here. So you have some resistance, probably right around 70 to 71 cents, and then right where it peaked out at right around 95 cents. So like I said, there isn't much resistance as far as to the upside if the stock does decide to start an uptrend here sometime soon. But again, I would either wait for one or two confirmations, either a nice breakout with a nice full candlestick on high volume, and or a pullback right around that 56 cents for a safe entry, and then for the price action to begin trending back up, because you are creating higher highs and higher lows. All right. Next, we'll be talking about ticker AGEN. So what I like about ticker AGEN, same thing, it works in this channel. So if you pay attention, this area right around 320 is a nice area of support, as you can see here. 1, 2 had to run up, pull back into it, run up, pull back into it, run up, and now you're pulling right back into that area again. So this could be a nice low risk entry to play this channel that the price action is bouncing back and forth between. All right, so you know, down, up, support, resistance, support, resistance. Now we're back at that line of support. Now, one thing to also pay attention to with the weekly candlesticks, as you can see here, as you're making these lower highs, you got a lower high, lower high, lower high, lower high. And then again, you have a lower low, lower low, lower low, lower low with a lot of accumulation to close it back up in this general area. And then again, here you have a higher low. And then the past week, you have a higher high. So now we're beginning to show the shift as far as the candlesticks, where we're creating higher lows and higher highs for a possible reversal. Seeing that we are in that strong area of support right around that 320ish to 330 area. Now, one thing to pay attention to is you do have your 10-period moving average coming down, so that can act as a line of resistance moving forward, which is currently sitting right where the middle Bollinger Band is at, right around that $4 to $4.05 area. So good low risk entry going in on the daily. And even on the daily, as you can see here, as you had that run up, as we was pointing out the channel, as the price action was trending down below its 10-period moving average. See how the 10 SMA and that 1 standard deviation Bollinger Band aligns? That's because, like I said, the 1 standard deviation acts as a 10-period moving average whenever price action is trending very hard upwards or downwards, as you can see here again, and then on a reversal end here. Now what you see now is we hit that area of support like we pointed at on the weekly, right around that 320 to 330 area. The price action is beginning to consolidate and move sideways. You have finally broken above that 10-period moving average, and you're sitting right on top of it as far as consolidation. Now, one thing to pay attention to is you have that middle Bollinger Band coming down. A break above the middle Bollinger Band, which is currently right at 355 on high volume, will signal the beginning of the uptrend as far as the channel we pointed out to head back into that area of resistance, which we pointed out was right at that $4.85 to $5 range. So a lot of signals pointing to a possible breakout here with the Bollinger Bands beginning to come down and constrict. You are currently holding above your 10-period simple moving average. Like I said, a break above that 355 on high volume with the bands constricting would possibly signal a breakout to the upside again to start heading back into that resistance. So you could possibly play this channel, give or take, you make it wherever you make your entry, from that 334 to 342 spread up to about $4.85 to $5 pending. But 320 to 330 definitely looks like a heavy line of support for ticker AGEN, and that's what I love about this stock. You don't have to worry too much because this line of support has been tested on multiple occasions, and even now you're beginning to see the price action reverse on that big picture scale. And last but not least, ticker PLX. Again, so looking at ticker PLX, as you can see here on the weekly, you had this nice run up, pull back, again rejected by that 1 standard deviation, and then the price action beginning to pull back again. Now this one's a little more risky, saying that we have not broken above that 10-period moving average, which is currently coming down right around that 46-cent area. Now what I do love about this area is if you look at the low of where it closed, it was this past area of support. All right, so as the price action began to trend down here, line of support with the bounce up and the rejection by that 10-period moving average with the dip below, and then again a line of support before the break above. So again, you're pulling back down into that line of support, which you want to see hold, which is right around 40 to 41 cent right now. With the 10-period moving average coming down, you're kind of getting like this descending triangle channel style play here. But again, a break above that 10-period moving average, currently sitting right at 46 cent, with that 1 standard deviation Bollinger Band sitting right at 49, which curtails with this low depicted right here, and then this channel's resistance right here. Would definitely put you in that bullish uptrend up to the middle Bollinger Band right at 60 cents, which curtails with this price action's last line of support. So we definitely want to try to play the band. So some heavy resistance overhead with strong support right at 40 to 41 cent. Again, you want to look for that break above 46 and 49 cents respectively to try to play the middle Bollinger Band right at, well, the middle moving average right at 60 cent for some quick profit. Now looking at the daily, if if you zoom in, as you can see, the price action was on this nice downtrend with your 1 standard and your 10 period aligning perfectly, and now the price action has broken out of that downtrend and is trending sideways, holding above that middle Bollinger Band and the 10 period moving average as it begins to trend upwards. Now there's solid volume within this. No, what we want to see is volume again, which would correlate with that breakout I was just telling you about right at that what did we say, 46 cents and 48, I believe. Let's go back out to the weekly. Yeah, 46 and 49 cents, which are its 2 areas of resistance. So again, that matches with the 2 standard deviation Bollinger Band. A break above that 46 and a break above that 49, which matches these top outs right here with the profit taking, what's happening, would definitely signal the beginning of an uptrend to start pushing back up into that 60 cents we pointed out, which would be this line of support and this channel's line of resistance before the downtrend for a possible quick spread. All right, but yeah, those are my top 3 for the week, plus the one we just pointed out. Again, if you learned something, good. Make sure you enter these stocks on your own accord. Make sure you enter on your own plan. Just because I point out what I'm seeing, you may be seeing something different. So please make sure you enter with your own plan, entry and exit plan, and you manage that risk, as to some of these stocks are pretty risky plays. But again, I deeply appreciate every single one of you. And till next time, I'm out.
Houston, Tranquility Base here. The Eagle has landed.